Range trading is one of those strategies that often gets overlooked, but it can be incredibly effective, especially when the market isn't trending. Instead of chasing breakouts or waiting for a trend to form, you're simply taking advantage of price bouncing between support and resistance. It's simple in theory, but having the right indicators can make a huge difference. So let's talk about the best technical indicators for Forex range trading and how to actually use them the smart way. First, there's the RSI, Relative Strength Index. This one's a favorite for a reason. When RSI goes above 70, the market is considered overbought. Below 30, oversold. In a ranging market, that's golden. You're looking for price to reject resistance when RSI is high and bounce from support when RSI is low. It's like getting an early heads up on a potential reversal, but RSI works best when you use it with price action. So don't rely on it alone. Pair it with visible support and resistance levels for confirmation. Then there's the stochastic oscillator, similar idea to RSI but with more sensitivity. It reacts quickly to price changes, which is perfect when you're trying to catch reversals inside a tight range. When the stochastic crosses above 80, look for potential shorts. Below 20, possible longs. The crossover of the two lines in the oscillator is key, especially when it aligns with price hitting the top or bottom of the range. Bollinger Bands are another solid option. They create a visual channel around price. And when price touches the upper or lower band during a range, it often signals a reversal. In range conditions, the bands will narrow, showing low volatility. That's your cue to start watching for those bounces. Bollinger Bands also help you see when price is breaking out of the range, so it's useful for both entries and exits. The average true range, or ATR, doesn't give trade signals directly, but it's a powerful tool for managing risk. In range trading, you want to trade when ATR is low. That indicates a calm market. Plus, ATR helps you size your stop loss based on current volatility. That way, you're not risking too much or setting stops too tight. Support and resistance levels aren't indicators in the traditional sense, but they're absolutely essential for range trading. You can draw them manually or use an automated tool. Once price tests these zones multiple times, they become reliable areas for trade setups. Combine these zones with RSI, stochastic, or Bollinger Band signals, and you've got a powerful trading combo. Now, you could manually track all these indicators, jump between timeframes, and draw everything yourself, or you could make life easier. One tool that's made this way more efficient for me is the Trading Management Solutions EA by TakePropips. It's not just about automation, it gives you a full dashboard of indicators, trade signals, and risk management tools. You still make the decisions, but it helps you see everything clearly and react faster. It scans for range setups, uses built-in RSI, Bollinger Bands, and other tools, and can manage your trades with features like trailing stop, break-even, and partial closes. It's perfect if you want to stay in control, but without the stress of constantly switching between charts and tools. So if you're diving into range trading, focus on combining the right indicators: RSI, stochastic, Bollinger Bands, and ATR, with solid support and resistance. And if you want a smoother, smarter way to trade ranges, the Trading Management Solutions EA can definitely help streamline your workflow.